get this to minimize. There we go. Everybody in the waiting room, but that's okay. All right, guys, well, we're going to go ahead and get started. Hope everybody can see the screen. At any time, if you want to, you can unmute yourself and speak anytime that you want, you know, or just raise your hand. I'm going to try to get this. I don't know if you guys can see this other box. All right, good day. So first, what we're going to do today is we're going to start, you know, the subject was how to boost your credit scores in 30 days or less. All right, so, you know, first what I'm going to do is go off of just some ways to boost your credit scores, you know, to get your credit scores higher. And then we will talk about some other ways to get the credit scores boosted up within 30 days or less. All right, so again, there's a loophole in the system still that's still valid that you can use, which I'll go with you and tell you exactly how that works. Maybe some of you have an idea, maybe some of you don't. And then also, then I'll talk about things that you can do yourself. You know, one of the major things that I see when a person calls me, usually a mortgage broker calls me and says, hey, John, can you take a look at this credit to see what we can do to boost the credit scores, get the credit scores higher as soon as possible. You know, so we'll go over that as well. And so first, let's go, you know, here's the ebook I have, which I can send to anybody that wants it. This is 48 ways to raise your credit scores. All right, so here they're going in, they're talking about what is a FICO credit score. All right, so if you go to your back office, your portal that we give you access to, in the top right area, there's an educational section there. And in the educational section, there's videos and a couple articles, but mostly videos that explains about credit scores. There's one that we did that explains about credit scores. So the FICO credit score is just like Windows, Microsoft versus Apple computers. You know, Windows, Microsoft owns about 90% of the market, and Apple, Macintosh owns about 10%, you know, when it comes to desktop and laptop computers. So FICO is your Microsoft, so to speak, and Vantage Score, which you see on Credit Karma, is your Vantage Score. So that owns about 10% of the market. So the three credit bureaus got together a couple, you know, some years back and developed the Vantage Score to compete against FICO, because FICO is its own company. It's not the credit bureaus. It's a completely separate company that created the FICO credit score algorithm some time ago. Now, just like Microsoft Windows, you know, you have different versions. So you had, you know, prior to Windows 10, you have Windows 8 or 8.1 and Windows 7 and 2000 and so on and so forth. And this is the same thing with FICO credit score. Now we're at FICO 9 credit score, but nobody uses it because it just came out not too long ago. And, you know, so you got to think of yourself as being a creditor, and you have a system that you're used to judging whether to extend credit to borrowers based off the credit score and what's on the report, but usually what's their credit score, to give them a quick answer whether you're going to accept them or not to let you borrow their money. And so, you know, so when you change over to a different version, things are changed differently, because why they go through different versions is because of consumer spending habits. All right, so That's, you know, and they change it about every 4 years. So if you're looking at a mortgage company, they're using FICO 5 because that's Fannie Mae and Freddie Mac, and they don't change very often at all. And, you know, if you go to some, you know, any creditor can use any score they want, and they can create their own scoring system as well. You know, so anyway, again, a FICO credit score is what 90% of you lenders use. It's a 3-digit number to determine whether they want to extend credit to you based off of your credit history, amount due, and so forth. All right. And so, you know, on a FICO credit score, it goes from 350 to 850. So there's only 500 points in there. You know, so if you're below 350, you have no score, and 850 is the max that you can get. All right. So, you know, I didn't want to really go over credit scores here on this particular webinar because we've already did this. You know, I'll go, you know, payment histories that you're just paying on time. So once you hit a 30-day mark, it's going to be reported as a late on your credit. If you pay at day 29, it does not affect your credit reports, you know, or credit scores, you know, because they can't mark it as late. You know, it has to be 30 days or more. All right, and it goes in 30-day increments. 30 days, if you're 60 days late, it's going to report again a late, and so forth. All right, so in the calculation on the FICO is 35% is just paying your bills on time. If you have a defaulted account or a 30-day late and so forth, that goes into the 35%. Amounts that you owe, so that's your balance as compared to your credit limit for the most part. Installment loans do count, but very, very, very little. Mostly this is credit cards, all right? So 30% of your credit score is mostly your credit card balance as compared to your credit limit. So the higher your balance is on your credit cards compared to your credit limit, the lower your scores go. So you really want to be, the rule of thumb is no more than 30% of the balance compared to your credit limit. The sweet spot, if you're trying to get to 850, is 1 to 10%. Of course, if you pay it completely off, it's very little difference of points, but there are a few difference of points in there. 15% of your credit score's length of history. So the longer you have an account open, the more credit history that you get. You know, so this is why I say do not close credit card accounts, because if you close it, you're not losing that history, but you're not gaining any more history. All right, so it's going to close. Once you zero out the balance, they're going to quit updating, and that's, you know, if you had it for 5 years, you only got it for 5 years, and you're not going to get to 6 years because it's closed and done. All right, 10% of your credit score is new credit, they call it, which is inquiries. It's hard inquiries. Hard inquiries is when somebody checks your credit like a financial institution. Soft inquiry, which does not affect your credit, is you checking your credit scores on a credit monitoring service or anything like that. So there's hard inquiries and soft inquiries. So the hard is what affects you for 1 year, but shows on your credit report for 2 years. All right, and then the last 10% is mixed credit. All right, so meaning that you don't want all revolving accounts, which would be these major bank card, credit cards of Visa, MasterCard, you know, Discover, retail cards, same thing, you know, so that goes into that 30% mark. And so these are called revolving accounts, and these are installment accounts, mortgage loans, car loans, personal loan. All right, so you want at least one revolving, at least one installment in order to get this 10% of your FICO credit score. So 10% of 500, 50, right? So this would count as 50, up to 50 points, etc. All right, so let's go into how to improve your credit. Of course, removing inaccurate information. Well, it's not just inaccurate information, it's derogatory inaccurate information. All right, or, you know, because you might have some inaccurate information that's positive and that's actually might be helping you, so you might not want to have it corrected. But, you know, So that's why you have to review your entire credit report, which each of the credit bureaus, to determine what's on there and if anything's accurate. Okay, so these are the things that you want to look for. You know, did you authorize inquiries? This means, you know, see who checked your credit, when they checked it. Did you authorize it? You know, a thing about this, if you have a Capital One account, credit card, and you opened it last year, and then you see Capital One check your credits last month, well, they have the authority to do that. If you look in your contract, it says they can check your credit at any time they want. So just to, you know, let you know. All right, so look for, you know, any other errors, credit limits not being reported. You know, so you're going to have to look at the date last updated to the creditor, make sure they're reporting the correct credit limit or balance, limits and balances. You know, same thing here, see if they were paid or whatever, authorized users, you know, and their outdated debts. So outdated debts means, excuse me, an account can stay on your credit 7 years from the date that the account went into delinquency. All right, so if it's past the 7 years, it should be off every credit. All right, so that's what they mean by outdated. Now, positive accounts that have been closed and zeroed and everything stay on your credit 10 years from the date closed. So trade lines are nothing more than your accounts. You know, it's just a technical term that we use in our industry. So your accounts are, make sure all those are correct. You know, make sure you don't have any accounts that are not yours. All right, so, you know, you're going through the credit report here, you know, making sure your Social Security number is correct, contact any creditors that you feel that, you know, is incorrect as well. Make sure your addresses are updated with the credit bureaus. Of course, pay your bills on time. That's the 35% mark right here. Okay, so you want to pay your bills on time, pay your debt down. That's the 30% mark, which is second largest thing. Again, this has to do with the revolving debt, which is credit cards. Don't close your old accounts, which I just mentioned earlier, you know, because we want to add more history as long as we can. Okay, ask for a credit increase. So if you notice you have a credit card, let's say with a, you know, $500 limit, all right, and your credit score, and you've had that credit card for, you know, a year, 6 months to a year, and your credit score is 680, you know, and your balance is really low, because you want to make sure your credit scores are high as possible before you start asking for a credit limit increase. So, and it reflects on your credit, so you have the highest possible credit score. So when you call them and they look at your credits or your scores, then you're more likely to get approved. All right, so we usually recommend about every 6 months asking for a credit limit increase. The reason for a credit limit increase, excuse me, get some water here. So the reason to ask for a credit limit increase is because if you have a balance, let's say you got a $500 limit and you got a $250 balance, well, you're at 50% utilization. Now, if you ask for a credit limit increase and increase it up to $1,000, well, now you're only at 25% utilization, right? And that in turn is going to help your credit scores. Because remember, that's that 30% mark of your credit scores. All right, apply for credit sparingly. So if you're shopping for a credit card, every time you apply for a credit card, it's going to affect your credit scores because it's now a hard inquiry. All right, so this is saying don't apply for a lot of credit all at once, because as soon as you apply credit for a credit card company and then you go to a second credit card company, they're going to see that you just applied for the other credit card. So they're onto that. So if you say, oh, well, you know, I'm going to apply for all these credit cards and get as much credit available as possible, well, do that over a period, right? Not a short period, do it over a longer period, say 6 months, 3 to 6 months. Okay, re-aging. This has to do with, our industry of, so usually what happens with re-aging is if you have something with a collection company and they know it's about to drop off of your credit because of the 7 years or something, sometimes they'll change the date of when you defaulted so it stays on your credit longer, but this is illegal. We're going to do that. Rapid rescores. Well, this is the one item that it doesn't have to be with mortgage lenders. All right, so this is the item that I was going to discuss and speak about. Getting your credit scores within 30 days or less higher. So the strategy of this, let's say you have a credit card with a $1,000 limit and you have a $900 balance. So you're at 90% of your limit, all right? So, and you paid it off, right? But you look at your credit and it still shows a $900 balance, but you paid it off last week, so they haven't updated yet. So, so most credit card companies and other lenders only report one time a month, right? So you're going to have to wait until they report that new balance in order to see the higher credit score. So what a rapid rescore is you're getting that updated before their dates of normally updating your accounts to the credit bureaus. So the way this works is you will contact your creditor, say Capital One or whatever, and say, hey, Mr. Creditor, please send me a letter that says what my balance as of today is. All right, so you can have a fax or whatever. It's got to be under a letterhead and, your name, of course, and account number and telling you what the balance is and data and all that. And we can send this into the credit bureaus. Usually this is done by a third-party vendor, but we can push it through. I do know tactics, my way of pushing it through to the credit bureaus to get them to update it usually it's within 72 hours. So instead of waiting, if you have to wait another 2, 3, whatever weeks for the creditor to update, well, now it's called the rapid rescore. We can have it updated usually within about 3 days by doing what I just said. All right, so that's one way to get your credit scores higher within 30 days or less. All right, so here they're talking about your credit scores. When you higher your credit scores, the more doors that open. We all know that. The lower your credit scores, the less doors. All right, let's see. Have the credit bureaus add new accounts. All right, so again, if you add a new account to your credit, this will lower your overall age of your credit history. All right, so what I'm going to talk about, I will come back to this about adding a new account, but I'm going to tell you a secret, a loophole in the system that still works to this day about adding a new account in a particular way where you get the best benefits to actually help your credit scores get up within 30 days or less. All right, so it says don't pay off old debts to collectors. The reason it's saying this is because if you have an old debt, right, and it hasn't updated in 24 months or more, and you decide to pay it off, well, now it's going to get updated to a zero balance, and the credit scoring algorithm, which is the credit scoring model, is going to look at that as a new collection, and therefore it's going to lower your credit score. Only because it got updated and wasn't updated for 24 months or longer. Now, let's say if it has been updated, it continuously gets updated every month, or has been updated within the last 6 months to a year, then you could pay it off and it shouldn't hurt you, wouldn't hurt you negatively. But again, if it hasn't reported or updated within 24 months or more, then that could actually hurt you to pay it off, you know, or settle it. All right, so which we see that happen all the time with people. All right, true credit card balance. So again, just making sure that your balance is up to date. You know, again, you can do that through the rapid rescore. You will have to wait until they report your balance. Okay, applying for a car or mortgage. And this goes with student loans too. All right, so when you are for the three categories of auto, mortgage, and student loans, you can apply as much as you want in those three categories in a 30-day period with only one of the inquiries counting against you. All right, so give you an example. Let's say I went to a car dealership, you know, and I wanted to go and buy a car, and I didn't get pre-approved or anything before I walked in there, and so they said, oh, well, let's check your credit and you know, see how you are to get you approved for the loan. Well, what a lot of car dealerships do is they got 10, 15, whatever lenders at their disposal. All right, so they'll have a lender pull your credit, and based off of, let's say, you know, you're in the 700s, they'll send it to 3 or 4 different lenders, which each of them pulls your credit. Or if you're in the lower end of the scoring system, they'll send it to another different types of lenders. So you can have 10 whatever credit pulls from walking into that one dealership to apply for that one car. And a lot of people get upset about that, but there's no reason to get upset because only one of those out of those 10 is going to be affecting you. Okay, so the other 9 will not count against you. You know, same thing with the mortgage and student loans. The reason this is because there are no terms and conditions given to you before you apply. Now, if you apply for a credit card, it'll tell you, oh, these are the terms. The terms are going to be that your interest rate is going to be from 10% to 30%. Well, they didn't give you a specific, but they gave you an idea. So credit cards are 1 for 1. So every time you get your credit card, credit check by a credit card company, it's going to affect you as a hard inquiry. It only applies for cars, mortgages, and student loans for that 30-day period to shop all you want in those categories. All right, so don't apply for retail store cards to get a discount. Now, some people walk in and say, oh, well, we give you 10% discount, 50% discount if you apply for our store department card. Well, this is a credit card. It's a revolving debt. You know, it's a charge card. You know, it shouldn't say charge card, it should say credit card. Here, there's a difference. The scoring system looks at retail cards just like the major credit cards, MasterCard, Visa, Discover, etc. You know, so if you don't, you know, the reason I don't like retail store department cards is because, one, you can only use it at that retailer. That's no good anywhere else, you know. Another reason is because they usually have a high interest rate compared to the MasterCard, Visa as well. And that's the major reasons. And plus, if you don't, you know, shop at that one all the time or on a regular basis or whatever, then it's already no good. So let's say if you move, let's say if you get one from, I don't know, someplace down here, store department card, and you move to another state and that store is not around, well, you're not even using it. And so if you don't use it for a year or more or whatever, then that retailer store card could shut your credit card down due to inactivity. So that's why I tell all our clients to use your credit cards once every 6 months or so, just to buy something small, pay it off, and that's it. You know, if you don't use it for a long period of time, they have a right to shut it down, to close it to inactivity. They can close it for any reason they want to. They have that right. It's their money. But anyway, that's one of the reasons they do. Okay, so ask a creditor to remove a late entry with a goodwill letter. So what this is, if you were 30 days late on any of your account, on an account, you can write a letter saying, hey, listen, Mr. Creditor, I've been with you for the last year, 2 years. I like your service. I slipped up, or I had financial difficulties, or I had a hurricane or whatever. Sorry, I was 30 days late. Can you remove this from my credit? They don't remove it from your credit because that's the credit bureaus, but they can send a notice to the credit bureaus to have it removed, right? They have that ability, all right? So don't, so they do. But you're not going to get this if you have consistent lates. They're not going to remove your lates off of a goodwill. It has to be like, one late in a year, and you were never late before, type deals. All right, so before you do business with anybody, of course, check out the companies on the internet. You can look at the Better Business Bureau. I really don't care for the Better Business Bureau because it's a private organization that's for profit, so it has nothing to do with the government, so that's private individual company. All right, but you can go and, whatever company creditor you're looking at, Google it and say reviews at the end, and it'll come up and you can see on Yelp, on Google reviews, on, there's so many different sites that it's got different reviews for companies. So you have to look and make sure they're not, maybe like a non-profit review company. All right, so check the credit report and score on a regular basis. So, this is mainly to prevent fraud. So if you have Credit Karma or some kind of credit monitoring service that you use, most of them will email you when something changes on your credits, so you really don't have to, check it on the regular basis nowadays because of the automation system now. So, just notice when you get an email or something that something changed on your credit, look at it. If you don't notice it, then you need to address it right away. Contact that creditor. Usually they'll have the phone number on your credit, or the, same thing with the increase. Call them up. Hey, I didn't authorize this. I don't know who this is, why you did this, blah, blah, blah. And, majority of the time they, okay, sorry, because they know that fraud happens. They'll apologize and, and have it removed from your credits, because they don't want any problems of you suing them later or anything else, and they want to be in compliance. All right, inquiries, we already went over that. That's people that's checking your credit, so, the rule of thumb is not to have more than 5 within a 1-year period. Again, student loans, mortgages, and autos only count as 1, so that's not part of that 5. So if you had 10 autos in 1 month, only count as 1. So the other ones would be credit cards, again, or 1 for 1. So every time you apply, that affects you. So no more than 5 in a year. The lower, the better. All right. Don't lie on your loan application. Well, this is each to its own. So one of the problems that that I know, let's say you have a 720 credit score, right? So you apply for a credit card, and for them, they're going to check your credit, of course, and you got a 720, and you think you're going to get approved and everything else. But the thing is, on the application, you put that you made $25,000, $30,000 a year. Well, they might get you approved. They might approve you still, based off your debt to income ratio. But usually that limit that they're going to give you, the credit limit, is going to be low because of your income. So most credit card companies and lenders, mortgages, yeah, they're going to look at everything. But most credit card companies are not going to ask you for your tax returns or anything like that. You know, so if you say you make 50,000 a year, you're probably going to more chances of getting approved, more chances of getting a higher credit limit. See where I'm going with this? I'm not telling you to lie. I'm just telling you what they look for. All right. Budgeting, of course, you know, I mean, this is all, you know, everybody's grown here. You should know how to budget your stuff. If you don't, let me know. I have a CPA accountant that will help you with your budgeting. I can send you spreadsheets that already have the formula in there. You just got to put in numbers of your income and expenses, and it'll calculate everything for you and let you know your bottom line and everything else. You know, so just email me or call me or whatever. I can email that to you as well. Savings, of course, you always, you know, want to save 10% or more. They say pay yourself first, you know, before you pay anybody else. Again, Social Security is supposed to be diminished within the next, I don't know, 30 years or something like that. So, you know, I'm not a financial advisor, so I'm not going to give you financial advice, but we all grown here. So, you know, but building assets, you know, so one thing I tell my wife is, listen, if you want a liability, that being a car payment or some other kind of payment, you know, build an asset first to cover your liability, you know. So it could be like rental income. Now you're making money off of a rental or something. So you got a surplus, you know, so that'll cover that asset, will cover the new liability, you know, anything like that. All right, of course, plan for financial emergency. This really doesn't have to do with the credit. It does, because if you don't plan and you have a financial emergency, then that can mess up your credit. So it's kind of related in a way. But, you know, a lot of stuff that does happens. We have a lot of clients that had medical crisis, death in their family, divorces, losing their jobs. You know, that's where majority of our clients come from, most of the time. Get the right insurance to help with emergencies. Again, there's credit card insurance. If you didn't know that, in case you lose your job, you know, you have insurance that'll cover your credit card. Most credit card companies offer this. It's a small fee per month. Loan insurance as well. So if you have a personal loan, there's mortgage insurance. So if you have a mortgage, not just the insurance on the property to cover for damages, but mortgage insurance to cover in case you lose your job or something, to cover your mortgage payments. If you need any insurance whatsoever, let me know. I have plenty of contacts for this, you know, from disability to life, health, any insurance that you need, just let us know. All right, marriage and your credit score. All right, so, you know, some people think when you get married that now your spouse's credit is now your credit. Well, that's not true. They don't merge, you know, so your accounts are your accounts, their accounts are their accounts. The only time that you're gonna see them put together is if you have a joint account. Joint account is where, let's say you have a credit card, you both applied for the same credit card, you know, it doesn't matter if you're all co-signer or whatever, it's a joint account. It's the same thing, okay? So don't let anybody tell you that being a co-signer is not the same, you know, is not the same thing, because it is, all right? So a joint account, if you both, you know, sign for the card or for the account, then it's a joint account. It's going to report on your credit and the other person's credit, spouse's credit. All right, so I'll tell you, this will go back to what I'm going to tell you at the end of this webinar of how to get that credit score boosted up and how to avoid joint accounts. Because I tell people, listen, when you get married or if you're married, do not get joint accounts. You know, if one person can do it, you know, get your own credit cards. If you're getting a home, well, put the mortgage in one person's name. Nothing says it has to be in both people's name. You know, the mortgage that I have is that my name is not on my wife's name. She has to be on the deed by state law, but She doesn't have to be on the mortgage. Nobody says she has to be. And it works out better, you know, because now she doesn't have that income ratio on her credit. It's only on mine. Of course, we know learn how money works. We already know that. Stay in financial shape. Try to get the late fees removed. Again, you can ask the lender if you, let's say, I know Capital One's horrible about this. 1 day late. I was 1 day late because it fell on a Sunday, and I spent my time with my family on the Sunday. I didn't catch it. That they didn't do it on Saturday or whatever. Didn't catch it. Missed it on Sunday because I was spending with the family. And that's the day it was due. And then on Monday, I paid it, and they still hit me with a late fee because I was 1 day late, you know, according to their due date. All right, so, but you could ask for a courtesy, which I did, and they reversed it. So I got the late fee back. All right, stay organized with your bills. That's go without saying. Set your goals. That's a whole different webinar to me. You know, I'm not going to go there, but, you know, for credit purposes, you know, is when I say set your goals, of course, you know, if you have high credit card balances, so set a goal to get those credit card balances back down, you know. So, you know, pay like all the minimums. Let's say you got 4 credit cards, pay all the minimums on 3 and pay all you can to that one that has the highest interest rate until it's paid down, and then do the same, and then start on the other 3 and so forth. Loans and your credit scores. Again, of course, we know that loans amount that you owe. Again, this has to do with revolving debt, not personal loans, not mortgages, not home equity line of credits. All right, you'll see home equity line of credits as revolving because it is a true revolving. You know, you can borrow and pay back and borrow and pay back, but it does not affect that part of that 30% because the algorithm looks at it as a home equity line of credit and not as a part of the credit card part. All right, refinancing your home or car loan. Again, if you get a car and you got 20% interest or high interest rate or whatever, and you got your credit straightened back out, you know, or your credit card balance, you know, credit scores higher than they were, you know, so you were in the 500s of credit scores and now you're in the 600s. Well, hey, call that creditor. I suggest call that creditor, ask them if they will get you a lower interest rate. If not, well, refinance it. You know, refinancing a home loan costs you a lot more than refinancing a car. A car loan is no big deal or refinancing, you know, meaning that you don't get charged a bunch of fees. Refinancing home, you got to go through closing and, you know, there's a lot of fees involved and all that. So, you know, you got to use your rule of thumb when it comes to refinancing home. Are you getting a lower interest rate? Are you taking cash out? Why are you refinancing, etc.? Anytime you want to do any kind of home loans or real estate or cars or whatever, let me know. I can assist you with that. Bad credit lenders, be careful of these people. Making sure that you review the terms and conditions before you sign. I know you might get desperate and you might need the money or whatever, but make sure you know what you're signing before you sign it, you know, because they got some high interest rates, you know, so be careful. Some of them's got annual fees and monthly fees and high interest rates, and you gotta look at all the terms and conditions. Okay, so if you're on vacation or in the hospital, making sure your stuff is taken care of by somebody. You know, if you plan to go on vacation per year, depends on how long you're on vacation, only a week, just make sure everything's paid up or whatever before you leave. If you're in a hospital, then, you know, if you set stuff on automatic payment, you don't have to worry about this part, you know. So, but if you're in a hospital and we know things happen, then set up on automatic payment or get somebody to handle it for you. College students and credit. I'll teach you some about this, you know, about college students and credit. which I'll go through this in the end. Remind me, I'll come back to it. Raise your credit score by consolidating your loans. It should be not consolidating your loans, should be say consolidating your credit card balances. So, sometimes, before some people get high credit card balances and they go look for a personal loan. Well, the problem with doing that is, well, if you got high credit card balances, most likely your credit score is pretty low, and so therefore you go look for a personal loan. Well, believe it or not, most personal loan companies will not give you a personal loan. Usually you have to have a better credit score than credit card companies for personal loans, especially unsecured personal loans. So usually they want you to be 680 or higher for personal loans. So if you're already maxed on your credit cards, well, you're probably below 680 or higher. So you have to look and try to get your scores as high as possible. Then, you can get a personal loan to consolidate your credit card balances. And so if you do that, now you got 0 credit card balances, and you just got a new personal loan, your credit score is going to shoot up because now your debt to income ratio and your utilization, they call it, on your credit card balances are 0 or very low. Okay. Protect the drop in your credit score. Again, this talks about insurance, credit card insurance, short-term disability insurance, etc. All right. So that's all I have there. Let me see how my video is looking in here. You guys can see me here. It's not showing me my video. All right, so to wrap this up or get to near to the end here, is what I wanted to share with you guys is what they call authorized users. Okay, so authorized users is the loophole in the system that now still works. All right, so when we're talking about marriage, somewhere in here, is if you have a credit card or your wife has a credit card or vice versa that that you want to use or want them to use, you can add that person as an authorized user, which the credit card company will send them or you a credit card in their name, and you can have them use it. And a lot of times that will report on the other person's credit. So let's say you're trying to get your credit scores higher as soon as possible. So you can have somebody add you as an authorized user onto their credit card, and that will turn and report on your credits, and so you will get the benefits of that as well, of the history, of the limits, so whatever, the longer they have the account open, so you get that credit towards your credit scores of the history. If they have a low balance compared to the credit limit, you get that as well. So, but there's factors, of course, you got to look at before you let that happen. If they have a high balance compared to the credit limit, you don't want them add you as an authorized user. If they just opened the credit card not long ago, you don't want them to add you as an authorized user, because if you do that, that's going to hurt your credit scores. All right, so just to let you know that. All right, so but even as an authorized user, you really want the authorized user to be, a family member or whatever, but it can be a friend. All right, so just to let you know, I do know American Express nowadays, if you get added as an authorized user to an American Express account, they will report as opened on the authorized user's credit that it was just opened because they just got added. They don't do like Capital One and some other creditors do, where they'll show the actually original open date. So that's one thing you got to be, about American Express. And not all banks will report authorized users. I believe Bank of America quit reporting authorized users now as well. Capital One is a good one. Discover is a good one. think Chase is a good one, I think, if I'm not mistaken. So, you know, and there are companies out there that do, companies and people that sell what we call trade lines. So you'll get added, you know, they'll add you as to one for a fee. You know, so if that's something you're looking for, we do have a company, not us, a third-party company that offers that, and we could send you their list and their prices, because they vary on prices depending on how old and the age, the limit and everything else. You know, so if that's something that you're interested in, you know, then we can send that to you as well. All right, and let's see. So when authorized users, that's probably the #1 thing, because as soon as it reports on its regular schedule, it's going to report on the authorized users credit as well. You know, so that's the #1 thing about boosting your credit within the 30 days or less. Pay your credit card balances down. You know, we went over that. So as soon as they show your lower balance, then that's what's going to reflect on the credit, and that's going to help the credit score, because it's the second largest thing that affects your credit, is the credit card balances. All right. Then let's see. Those are the main 2 things. All right. To the authorized users, a loophole. You know, Fico. I just talked to a representative in Fico. I was up in DC a couple months ago, and she says that they've done away with authorized users in the new FICO credit scoring system. Not that they've done away with them, but they can now figure out that if you bought that trade line, like if you got a friend just to add you, they say that now they can figure that that person's not related to you, and they will not count that particular account in your credit scoring system, in your credit scores. You know, but of course they won't say how they can figure that out. And, you know, because I asked them. All right, and so, but according to the that's the older generation of FICO, it still works. So use it. You know, it won't be around for much. I'd say within the next, I don't know, 4 or 5 years. You know, probably won't work anymore. But as of now, it does work, especially with mortgages. You know, especially with mortgages. All right. It works because they use the old FICO credit scoring system. All right. So again, if you're married, do an authorized user type. Do not, instead of doing joint accounts. And I went over the college students. Same thing with college students. If you have a son, daughter, whatever that's in college, the fastest way to build their credit and get their credit scores high as possible is add them as an authorized user. So when you add them as an authorized user, a lot of times that will report on their credit, and that will help their credit scores, and they can use the account if you let them. You don't have to give them the credit card to use. Be careful. All right. Let's see. Any questions or anything else? Let's see if I can figure out this chat. You can unmute yourself, or I can unmute you like Mohammed if you have it here. All right, Mohammed. Any questions, sir? I got you unmuted. You can speak now. I should be able to hear you. Let me check my volume. Oh, it's kind of low. Hey, Mohammed, can you hear me? You can type in. I have you unmuted. I don't know if you have a microphone on that computer. Or you can type in your control center. You can unmute. Oh, okay, you're muted now. You can unmute yourself, or you can type in if you have any questions or anything else. Questions going once? Questions going twice? No questions? Okay, well, if you have any questions about this, or If you want this PDF here to review later on, let me know. Oh, I wonder how my video looks. All right, that's it. If need anything, give me a call.